Having a stop losses in trading is essential if you want to have any kind of longevity in the market. Day trading and swing trading without stop losses exposes yourself to high risks. But do you really need a stop loss if you are investing instead? In this video, I will explain the purpose of a stop loss, when and how to use it, and also how you can avoid using stop loss with different strategy. So stay tuned until the end. So what is a stop loss? A stop loss is an order you place with your broker that will automatically exit you from the trade if the price tags your predetermined level. If you are in a long trade, your stop loss will set your asset to release a fixed monetary profit or loss. Your stop, therefore, is your safety net. Your stop loss should be set to a price that will mean your trade is invalidated. For example, if the price breaks through a zone support, your trade will become invalidated and your stop will take you out of the trade. Initial stops. An initial stops is the physical stop loss that you place with your broker. When setting up an order with longer term trend trading, this stop will be wide. By wide I mean relatively far away from your entry price as compared to a day trading or shorter time frame trading. This wide stop will allow for the trend to breathe on a daily time frame. Trailing stops. With the trend trading, I do not use a profit target. Instead, I use a trailing stop loss that will follow behind price as it moves in the direction of the trend. Although this means you will never exit the trade at the extreme of the trend. However, it does mean that you can stay in the trend for as long as you continue. So your stop loss will be triggered if the price reverses or pull back further than your stop loss allows for. For instance, you might use a moving average or an ATR for your trading stops. Now let me show you some example in how I use stop loss when I day trade or swing trade in the real world. If you watched the previous videos about the strategy I use for entering a trade when I day trade, you notice that I always enter a trade with a stop loss below the previous two swing lows. If you didn't watch the video, I highly suggest you to do so. Anyway, in this example, I want to enter this trade because I want to catch the bounce. When I was day trading, my strategies was floating around bounces in uptrends. Never trade a breakout because was never my trading style. I always mastered a buy the dip strategy since the beginning. So in this example, we will try to catch this bounce with using two swing lows stop loss as a strategy. Alright guys, I just wanted you to look at this trade. So this is Bitcoin on the hourly chart. We have higher lows and higher highs. We are in an uptrend in the hourly chart. Again, if you wanted to check my strategy, you can find it in my videos. I don't have a lot of videos right now, so it's easy to spot. Just find the strategy, and in my strategy you see that if the 26 is crossed the 200 EMA, and we already checked in the daily and the 4 hours, now we are in the hourly time frame. But if we have all these rules set up, we can start an entry with the strategy. I say that I usually use the RSI to spot the bounce once all the rules are set, and once the RSI approaches 30, around 30, because it's kind of an area, it's not precise. So in this case, I would just want to show you how stop loss works. So we have higher lows and higher highs. So we have a dip here. The RSI is going around 30. Now it's 37. So I wanted to enter this trade. Why I wanted to enter this trade? Because if I go backward, I can see that the last pivot point here on the daily is on 11,074. So I know that if we cross this level, we might be going up. And the wisest things to do here would be wait for the breakout and buy here, you know. But I'm not that kind of a trader. I'm not trade breakouts. So my style is buying the dip in an uptrend. Once we rolling back here, and the RSI is around my zone, because the principle is when there is an uptrend, buyers always buy the dip. You don't have to buy this point here. You can buy here in this consolidation zone, and whatever you can buy here. But the fact is, if you enter here your trade, you can also scale 3 entries to get the best average that you can. I usually scale like 3 entries so I can spot the best point, because if I entered here and I want to enter here, because you cannot be precise, when the RSI goes down, there is a flash down, you cannot be precise. But usually I use my bot and just command I wanted to buy when the RSI gets around this area, as long as the EMA 26 is above the EMA 200, just buy me this point. If the price drop another 2%, buy me again. And if the price drop another 3%, buy me again. So I do all this, I do automatically. Otherwise, I cannot staring at the monitor the whole day, you know. So, but anyway, once you enter the trade, suppose you entered here around this point, you can add an indicator called zigzag, and if you're not good with your naked highs, you can just follow this line here, or you can do manually at the beginning to learn how to spot higher lows and higher highs. Even though this is not the higher lows and higher highs for the hourly, because otherwise I should have gone like this. This is on the 4 hour, but it's just, I want you to understand the higher lows and higher highs here. I want you to understand the big picture here, which is if I enter in the dip here, I will put my stop loss under the previous two swing lows. And you can put your stop loss even under the first swing low, just like here. You can put your stop loss here and it will be fine. It's up to you. I just like to put two lows before because I feel more comfortable like that. I used to do like that. So this is my stop loss, right? Which is roughly 3% away from where I entered the trade. Yeah, 2.93. So I put the stop loss here and I let it run the trade. So if the trade goes in my direction, like this, I'm not going to get out of the trade right here, but I will get it wrong with the trade and stop loss. We're going up 16%, and the market is going this way. So we're going up, we're going down, going up, we're going down. So when I will exit the trade, I will exit the trade when the price breaks the previous low. So in this case, this is the low because we have higher low, higher high, higher low, higher high, higher low, higher high. As long as the market keeps doing higher lows and higher highs, there is no reason why I should exit the trade. But once the price is going to break down the previous low, which is this one, this will be my exit point. So I would have made roughly 10% in this trade. So this is the strategy I use with stop losses. Okay, now that we saw how I use stop loss and why it's mandatory if you want to day trade or swing trade, well, let me show you how I don't use stop loss while I'm investing. Trading without stop losses might sound like the riskiest things to do, a bit like going mountaineering without safety gear. Yeah, with the right risk control in place, it's not as crazy as this first sounds. Moreover, as I explained before, your stop losses may not actually be providing you with the protection that you think they are. Not all traders use stop losses, for one, because there are often better ways of managing risk, such as hedging or scaling. But first, let me tell you why. There are some arguments against using stop losses. By placing a stop loss, you're telling your dealer where you're planning to exit the trade. Unlike an ordinary broker, a broker-dealer can take market risk. That means that may not be entirely impartial. They could potentially be on the other side of your trade. This means your loss is their profit. When the dealer can see at what price orders are set to exit, that gives them an unfair advantage. With a stop loss, you risk being stopped out by a temporary price spike. How many times have you looked at the trade that it's been stopped out only to see the market happily moving in the direction you first predicted? Trading with a stop loss can make you careless. Some say that trading with stop losses leads to lax analysis and sloppy trading. Perhaps this is because the trader subconsciously sees the stop loss as a safety net. In a real market meltdown, a stop loss may not protect you anyway. This final point is killer. Far from being a guaranteed safety net, stop loss is only as good as your broker's ability to exit the trade at your stop price. When the market collapses and liquidity dries up, something that happens from time to time, a trade will exit at the first price it happens to hit. That could be many percentage points away from the stop out level, potentially leaving you with massive losses. So, how to trade without stop losses? Here are some alternative ways you can protect downside losses without using a broker stop losses.
So I'm here on Bitcoin chart, on the daily chart, and I'm about to show you my strategy. I use this strategy for a long-term investment, only for the long-term investment. Alright, this strategy has been for me the holy grail of the strategies because it helped me a lot and it always worked for me. First, this is Bitcoin the November the 6th and 2018 before the drop, before the huge drop to 3,400. Just imagine that we were here, we didn't know about the drop and whatever. Because the goal of this strategy is not to be stressed out. The goal of this strategy is kind of a mechanic strategy. With this strategy, you won't overlook the chart, you will live your life and hopefully doing other stuff other than investing. So this is purely investing. It's not trading. It's not day trading. It's not swing trading. It's not looking at the chart and nothing at all. This is Bitcoin, and this is the strategy I use to invest. And I use this with Tesla as well, and I'm using this with marijuana sector right now, and I'm using this with Bitcoin again right now, and altcoins. So I use this strategy all along because I changed my mind about strategies, and I changed my mind about day trading. I'm not day trader anymore, just sometimes, but I'm not generally. And I like to do technical analysis, and I like to simulate day trading, but I don't like to do anymore. Anyway, this strategy right here, it's part of the next video I'm going to do, which will be how to invest in long-term investment with this strategy. So keep watching. But this is about stop losses. Why I want to show you this strategy? Because there is no stop loss here. Simple as that. So, Bitcoin, we were at 6,578.46. All right. And what do you see here? How I managed to decide what to do because I didn't pick this point for a reason. I just wanted to be here right now. And how do I decide and why I want to enter here? All right. First, I see this is the previous bottom of Bitcoin. So Bitcoin bottom here, 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 and here. So I can just take a line here and see that this could be possibly a bottom. All right. So I have Bitcoin at 6,578. I took the Fibonacci to set a target. From the top, I'm on the daily chart, remember, long-term investment. I don't need to watch a 4-hour, I don't need to watch any of that, just on the daily. So I will take my Fibonacci and I will draw this line. And looking at this one, I will set my hypothetical target, which is between 0.5 and 0.61. So I will take this one and I will make this kind of area, alright? I don't need the Fibonacci no more, so I can take it away. And I know that right in this area, this is my target for the long term. This could be in a month, in a year, in 10 years from now. Remember, the aim of this strategy is not to use a stop loss because I am investing in a project that I believe into. I am willing to use money that I can lose. Alright? So once I invested my money inside of this, my money are not my money anymore. So I don't have to use this money anymore. I lock this money in this trade, and it could last years. All right. So I want to invest 10K with this strategy. So why 10K? Because it's part of my portfolio that I can afford to lose and invest. All right. This could be hypothetical my 1%. All right. So 10K. How do I invest this 10K on Bitcoin right now that we are close to this kind of a bottom, which might not be the bottom for as I know right now. I don't predict the future. So how do I do? I use another indicator, which is among my favorites indicator because I use this indicator a lot. You might know this indicator or you may not, but this is not about this indicator today, is about this strategy. But I will show you how this indicator works. It's the pivot point standards. You can find this right here. Just type pivot point and you will find it. So thanks to this indicator, now I have my strategy all set up. You don't realize that, but this is the way, because it has a pivot point right here. It has 5 resistance and 5 supports. So what I want to do is divide my 10K in 5 entries. So I'm gonna take my beautiful tool here to draw a line, and I don't know if Bitcoin is going to go up or down. The only thing is I know that for this month, because this line here, every pivot here covers, if you use this indicator on a daily time frame, is going to cover a month. You see, it's going to cover from the 1st of November till the 1st of December. So it's going to cover a month. It's going to move accordingly with the Bitcoin movement or any other market movement, the volatility. And it will move accordingly to that. So I say, all right, I don't want to enter here because there is no sense for me to enter just here, right? I'm not gambling. I'm not going to enter here close to the pivot point. This is too high for me. Where I wanted to invest is near the support, right? In this case, I want to invest to support. I'm going to put my order here. Sorry, 2K. So this is my first 2K. If the price goes down and I can buy here and I buy with my order, the price goes up, my target is still going to be here. Alright? So I will write it with 2K, no more. This is my investment on Bitcoin. It's going to be 2K, no more. I'm not going to put more money on Bitcoin above the pivot point. No, this is not part of my strategy. But if the price goes down, I'm going to put another 2K here. If the price is going to keep dropping, which it could be, you never know, because it's probability, I'm going to keep adding 2K. So, which is the difference so far? If you use a stop loss, you will enter 10K over here, put your stop loss down. But in a year of stop loss, how much money you will lose in stop losses? Have you ever counted that? Well, support 4. I'm going to put another line here. And I'm going to put another line on the support 5. So now, this is my strategy. Here we are. So I already have my order set for the month. If in this month I will get one of these orders, I will be perfectly fine because I have patience, because I'm not in a rush. So if it gets me 2K, I'm happy. If it gets me 6K, I'm more than happy. If it drops further, I'm super happy because I know what I'm going to do. So if within this month I will keep these orders. If we are going to consolidate another month, I'm going to move my orders accordingly to the pivot points, right? So now we're here, and let's see what happened. I have my orders all set, and let's see what happened. Alright, alright. So you can see, I got 1, 2, 3, and 4. 4 because the month has changed, but I would have took this one as well because it's close to the support one. Alright. So what happened? 1, 2, 3, 4. So now I have 4. Let's going to make an average here. So my average will be 4,718 roughly. Boom. So I can delete everything. So now, after 34 days, I moved my average from here, where I enter, to here. Now I have 8K. 8K at the average of 4,718. 8K. What about the other 2Ks? As I said, I'm not gonna buy anymore. My target is still gonna be here. So from here to here, that's my target. So I have 8K bought at 4,800. So let's see what happened. I reached my target, and now I can sell over here, where the Fibonacci told me it was going to go, because you never use the Fibonacci on the daily, but it worked perfectly fine. So now I got pretty much, so now I got my gain here. I got my 175% on Bitcoin. So what I made on this trade, $40,000 in 5 months. So this is my strategy for long term, and I use the same strategy for Tesla, and I use the same strategy for ACB, and I use the same strategy for Cron, and I use the same strategy in December for the S&P 500. So this strategy worked for me. It might not work for you, but if you respect the rules, invest the money that you can invest, there's no problem. I mean, I'm pretty sure you will have lost in 5 months more money in stop losses than holding Bitcoin and make this 170%. I'm pretty sure that. I will have lost more in stop losses trying to get all the bounces and shorting Bitcoin and whatever than make all this money. I hope you like the video. The next video will be this strategy, and I will show you how can you use this strategy with different markets. More examples. Alright? So if you made this far, please subscribe to my channel, watch other videos of mine, and see you next time for the next video. Thank you.